one thing that I'll just do directly is to share the charts. So I will start off by looking at gold. So I think in gold there's an interesting move coming along. So and I think markets will be, we're pricing in a move to the downside. Personally, I'm biased to be short, so I'm looking for markets to collapse at least to 18, 17, 19, 1850 levels, and then I'll show you the breakdown. So let's look at gold from a top-down perspective. I'll just look at it from the monthly perspective because I think this is a very good trade if it plays out as we expect. So if you look at gold on the monthly perspective, then you discover that you're in a bull market. So like I was saying when I was starting the video, I said markets are not random, markets are always moving towards some levels, and I still repeat, markets are not random, markets are always moving towards some levels. So if you had studied gold perfectly, it was clear that there was a bullish move coming, especially after we got out of this consolidation, which we've been sitting on for quite some time, so around 4 or 5 years. I remember in 2018 when this move started, so the move was catalyzed by the start of the trade wars. So if you follow fundamental events also, they'll tell you when some of these technical breakouts will come in. So when the trade war between the US and China started, gold started becoming attractive and the bull market started. With the reduction of interest rates and many other things, we got this move higher, and now the fiscal stimulus that was pumped in about February or March when coronavirus started now gave us this maximum push to create new highs. What do I think? I think the markets are still in a bull market, and I think the trend is still upwards. I think before 2022, 2023, gold will have to trade at 2,500. So I can give you the direction, but I can't tell you the time. So I think markets are still going higher. However, on the way higher, we always get corrections. So if you look at last month, the candle close was quite suggestive of a move to the downside. Again, the candle close came in at a crucial level, the $2,000 mark. So I think from this level you can expect a correction, and that's what I'm betting on. I'm betting on a correction at least to 1800, 1850 before the continuation to the upside. So if you just look at the weekly chart, we're trading above the R3 level, which is a crucial level. Rarely do markets stay above this level after they have bypassed the level. So anytime markets are above this level, I don't feel like it's a nice time to buy. As much as you can make money on such buys, the risk reward ratios of the asset are tipped to the downside. So for me, I'd rather be short than long, and I'll show you when I'll pivot to longs if I pivot to longs. And I think I'd also need a fundamental catalyst for me to pivot to longs. Otherwise, I'll still stay short. So from this picture, from this perspective, there's the 1920, 1925 level, which has been acting as a good support level. But I'm looking forward for this level to be broken and these markets to sink lower, at least to 1750. Touching this trend line the third time before the next bullish leg that I expect to take us now to 2100, 2200, ultimately 2300. I can't tell you the exact zone, but those are the prices I'll be watching. So on the daily chart, we have an interesting setup along. So on the daily chart, we have this channel. So first bounce, second bounce, we had this consolidation, breakout, and a move taking us higher all the way to 2050. After that, we had a steep collapse, and after that, markets moved into ranging. So for the last now 1 month, 2 months, the markets have been sitting in this consolidation, and this is what makes it interesting because we are getting closer to a breakout. The fact that we had a consolidation here and then a breakout and a rally tells me that this time we could also get a consolidation and a breakout. So what do I have? If I come down to the daily chart, now I am 50-50. My odds are tipped to be 50-50. There are two things that can happen. One, we could get a breakout of this triangle and a move higher. But I wouldn't be quick to execute that trade unless we get a break above this level. A good break and a good close. And at least I get some fundamental reasons supporting the move. Before that, I'll still stay short. And if I go down to the 4-hour chart, I have this triangle which tells me I should be selling gold and expecting gold to sink lower. So you can see clearly I've marked my shorts in validation level at the 1990 mark, and expect markets to keep on moving lower despite this this moves to the upside. So I came in short at around 1960. Currently markets are 1964. So I'm just watching. Not yet a good time to short. So if you're not in, maybe you can wait some more. But again, it depends on how you trade. So for me, I like following my biases and I like following the charts when they show me I should be in the market. So if you look at the 4-hour chart, this is what we have. And on the hourly chart, we have a pattern that is suggesting probably longs. And I didn't take the long position. So I actually spotted this setup yesterday, but I didn't take the long position because it was not in congruence with the top-down approach that I normally use. So I like taking trades which are aligning with the top-down approach, and for this one, the top-down shows me short, but the short-term, where I normally execute trades, shows me a long position. So what I did is I stayed out, but immediately we got this close below 1960, I came in short, expecting these markets to move lower. So I'm still short, I'll still be watching markets. If we get a break past 1970, so first of all, I'll get out and watch markets, what will happen past that level. If we keep on moving higher, then I'll wait for a break, at least a close on the daily. If we don't get a good close, then I'll come back short and look for shorts to the downside. In the event that I'm right and markets start collapsing, obviously I'll be looking for scale-ins as the markets will be going lower, but that's the bias that I have on gold, so that's what I'm watching. Next, I'll just look at oil, which is also quite interesting. So if you look at oil from a daily perspective, then you discover that, okay, let's start from the weekly perspective actually. So in the weekly perspective, I have this channel. So when oil went to zero, it was quite priced in. I think you could tell easily that the markets will go down. No one expected obviously a move to zero, but a move to at least 25, 35 was easily predictable. And I think once markets gets to that level, you would have made your money. So what do I have? Currently, markets have started a correction. So this is the first stage of a bull market. We're in the correction phase. So I'm looking for a correction at least to 35. If 35 doesn't hold, we could get a correction to extreme levels of 25. On the daily chart, however, currently markets were overdone. And when markets are overdone, we tend to get a pullback. So the S3 level hold was holding quite well last week, and we were long actually, and the markets never went higher, but we liquidated our trades on Friday. And on Monday, when markets opened and gave us a chance to come in long, we came in long and markets have started moving higher. So I was looking for a long at least to 40.5, 41 level, but on the 4-hour chart, I'd be willing to liquidate my positions at the 39.5 level. So if we don't get a good close above the R1 level, then I'll be looking for markets to probably even start moving lower, because if you look at correlations, I think this market is in its own world. The dollar is getting stronger, and when that's the case, it's very hard for the dollar to get stronger and commodities to be moving higher. So I think when the dollar gets stronger, commodities should be moving lower. So what currently I have a long position, I'm still in it. I came in for the long position on the hourly. This was the setup, so we had this triangle which was clearly formed at this point. Then I came in long expecting markets to move higher, and now currently I have my stops moved past break-even, so this is a risk-free trade. There's no risk for me unless I just look for scale-ins. I expected these markets to remain higher above R1, at least to rocket 39.8, but the fact that these markets are rejecting this level, which is also at 127.2 fib extension. So if I just measure again, you discover that the markets have gotten to this level, and that means that one leg of a bull momentum is over. We'll at least get a correction. If not a correction, we'll get a continuation to the 61.8, which is 39.840. So those are the two main setups that I have. The last one that I can look at before I pass it on to Caleb is Euro Yen. So Euro Yen, I also have a short setup that I've been holding now for quite some time. So on the daily, markets have been moving lower. On the weekly, in fact, this one was quite a good setup to the downside. So we had the third bounce of a wedge formation. So we had the first bounce, second bounce, and this was the third bounce, giving me some confidence in coming in short. On the daily, we were sitting in a consolidation for quite some time, but markets have started moving lower, and I expect markets will probably move lower to 123, 122.8 levels. So those are the levels that I'll be watching. On the 4-hour chart, what do I have? Not much of a pattern, so I have this sort of a consolidation again. Clearly the one I was talking about on the daily, you can see markets are bouncing off. This one is acting as a support, but I think this is temporary. I'm expecting this break and a move lower, at least to 123.5. So on the hourly, that's what I still have. Again, if we move below the level, I'll be looking for scale-ins as the markets will be moving lower. So those are the three main setups that I'm watching for this week. I think the main one for me is gold. That's the money maker in case it pans out as I expect. In the event that it fails, then there's no money for me this week, and I'll be waiting for next week to make some money. So that's it, and I'll see you guys next time.
Yo, what's up everyone? Hope everyone is good. Just a sec. There we go. So looking at the charts, as Kenna said, there's a lot of fundamentals this week. So today we have the Bank of the Feds. So the Feds are releasing their interest rates. I remember we talked about this on Monday, so we're paying attention to that. As I said on Monday, interest rates are the heart of the market, so anything that happens to that, we have to pay close attention. But as I said on Monday, we do not expect any much changes in the interest rates, but what we're paying attention to, or what many people are paying attention to, especially the people who watch fundamentals, they're waiting to see what the Fed, Jerome Powell, is going to say about the economy, how the economy is faring, about COVID and all that, if they're still planning on more inflation and all that. So that's what people are paying attention to. So with that said, I remember on Monday I looked at a few pairs here and there. I looked at gold, I looked at Dow Jones, which was my most favorable pair. GU, I told you I don't know what is going to happen next. USD CAD was also in no man's land, but sort of now markets are sort of creating that pattern that I was waiting for. And yesterday I wasn't on the chart, so yesterday I didn't look at any charts. Yesterday I was off for the day, so I haven't watched the charts since yesterday. I've come to watch the charts right now. So looking at a few things, sometimes it's good to also have that time off the screens. Coming back, you sort of see it much more cleanly, much more fresh. So if I screen share my charts, so I'll start with Dow Jones because I said this was the most probable pair I was watching. It's, I think, the only pair that I'm looking to trade this week until the others, because the others are really pegged on the dollar, my pairs, and I'm waiting for those interest rates to come out. And remember, tomorrow we have the, I think it's tomorrow, yeah, the pound interest rates as well, GBP, the UK interest rates. So also pay attention to that if you trade the pound pairs. That's GJ, GU, or I said what? GBP USD, GBP AUD, and GBP JPY. So looking at the pair, this is my Dow Jones. So you can see we're still respecting this trend line, clean trend line. Market came and bounced off the 61.8. You can see market came just like before. You can see this level was tapped, yeah. So same level, it was tapped once, twice, and market came and tapped it yet another time. So this was a strong confluence. It was a liquidity zone. It was 61.8, and it was a trend line bounce. As I said on Monday, this level has failed to be broken. 27,500, so market is failing to break below it. So as long as we remain above this, I'm having my bullish sentiment going on. So looking at the 4-hour chart, I remember on Monday I said I'm just waiting for those counter trend line here. Let's go to the 1-hour chart. So I was looking at this sort of like a triangular formation, but what was paying much attention to was this counter trend line. So this is what I was paying attention to. We can see market failed to continue forming lower lows and lower highs. So you can see this lower low, lower high, lower low. Then when we formed this lower high, we came and failed to break, to form a lower low this below this previous low. So market has come back above. You can see I had this zone. Market broke above it, had that retest, came and broke the trend line, had this retest of the trend line, and now we're failing to break above the 28,200 level, which is a strong level I'm watching. If you zoom back, you can, or if I go to the 4-hour chart, so what we're paying attention to is this level. You can see it was a touch over here, acted as support over here, support again, acted as resistance, and now it's sort of being broken and coming back below. Personally, I still see this level being broken. I see the market continue to form new highs. We are still within this channel formation. So as I said, market structure, very key. That's what I pay attention to. So I'm watching this level. So I was waiting for the counter trend line to be broken. That was a clean breakout, as you can see on the 1-hour chart. Clean because it was a breakout retest. Now I'm waiting for this level to be broken, and then we start getting those buys. So currently, as I said, I wasn't looking at the charts yesterday. So from today, tomorrow, if the market continues rallying to the upside, if we break this level strongly, I'll start buying into this market, targeting 29,000, where market had reached before we dropped at this level. So I'll be targeting around this level. But failure to do that, because I'm seeing a lot of dollar strength coming, so that can really cap it. If I look at the dollar index, so these are the things we pay attention to. So you have to really pay attention to all markets at the same time. So this is dollar index. Market came down. We've been forming lower lows, lower highs, clean. But over here, market has consolidated for the past few weeks, ever since 30th July. So the whole of August, we've been within this consolidation, as well as this month in September. So if we're able to break this line you're seeing over here that I have, then I'll be looking to trade now my dollar pairs, which is dollar index and Aussie dollar. So I'll be looking for, not dollar index, USD CAD. So I'll be looking for USD CAD longs and Aussie dollar shorts, which I'll look at it in a few. So if you get a break above this, I'll be looking for that 4-hour chart. We're seeing there's this sort of formation that I have. So if you start breaking above this level, then I'll be looking for those buys. So for those people who trade Euro USD, it's sort of same patterns are forming as well as on the dollar index. So if you're trading USD, Euro USD 1 day chart, I don't trade this pair, but I can just do for you people an analysis for the people who trade it, because market structure is market structure. So you can see these higher highs, higher lows, higher high, then you sort of get into this consolidation. So as long as you remain above this level, then we're looking for those buys, but we're not seeing that much momentum coming over here. Okay, but as I said, we always respect the trend. So looking at this market is bouncing off. So if you continue remaining above, wait to see if those pumps will come, and that means the dollar index will be going down. But there's that likelihood that this level can be broken, this trend line, and market continues going down. If you look at the 1 hour chart, clean patterns are forming. So if you know we look at wedges a lot, so you can see this wedge formation, market respected it, went to the upside. We sort of got this other wedge formation which acted sort of as a double top formation, which are the key things you're normally looking at. You can see that multiple rejection at that top. So you can see that first touch, second touch, third touch at the top of the wedge, and market dropped quickly after that. So on the Euro USD, we're looking for that. As long as we remain above the trend line, we're looking for those buys. But if we break this, which there's that likelihood, then we'll be looking for that downward trend coming. So if I go down to Aussie dollar, what I'm looking at, 1 day chart. 1 day chart, nothing much. Market has just been moving up. So sort of slowly. If you know Aussie dollar has slow movement, it doesn't go as fast as GU or gold or any other commodity. So we have this sort of trend line that market has failed to break. So just like the Euro USD, as long as we remain above this, just be looking for market to be going further up. But in the likelihood that market breaks down and starts forming that lower lows, let me remove this. So in any case, this is what also I'm watching, the sort of this channel formation. So as I said, market structure is what I'm watching. Last week I remember was covering this level. This level was a very strong resistance level. Market failed to break above it the whole week. And last week, if you use pivot points, this was the level P. So market refused to break above it. But this week, I think this was on Monday, or yeah, this was yesterday actually. Yesterday at 4 a.m. market rallied, breaking up above that level very strongly, but we're not getting that momentum to the upside. So it keeps coming down and going back up. So if you go down to the 1 hour chart, paying clean attention, I sort of have a wedge formation, which is something I pay a lot of attention to. So you can see if I zoom closer, what you're paying attention, or what I'm paying attention to, you can see this touch over here, touch over here, touch over here, and another touch over here. So market is not getting that strong momentum to the upside. So very likely you can see this market coming to touch maybe one more time before we get that drop. So there's a likelihood if we get that dollar strength, we can see a drop on this market coming. If I zoom out, I sort of have this channel. This was a long-term channel that was having a while back. So we had this channel, market broke above it, we came back below. You can see it was still respected because this lower boundary was market bounced off it. That's why I still have this channel even if we had this breakout. So what I'm watching now is market is failing to come up with momentum. You can see previously, you see this momentum over here, market came with so much momentum. Let me zoom that for you, that we are able to break above this trend line, okay, this channel formation. But this time there's a different scenario. So I'm paying attention to how the market is forming, the structure. So as long as we come back around here, I'll be looking for shorts unless we're able to break above this level. So I'm very inclined to getting shorts on this pair rather than looking for longs. But you can see it's going against the trend line that I was talking about, but this trend line has been respected multiple times. One way or another it will be broken. So I'm paying attention to that 78.6 as well as 61.8 level over here to see if those if we'll get liquidity around those levels and market goes down. So last but not least, what I look at is USD CAD. USD CAD daily charts. If let's start with that. So daily chart, you can see we've had this trend line for a while. Market has broke above. I remember I said on Monday, just a sec. I remember I said on Monday we got into this inside bar. So we're still within this inside bar. This was this candle that was able to break above the strong trend line that we've been having, but market has been in sort of that consolidation. So you can see this line I have over here acts as my support. So as long as we remain above this level, we're looking for the buys. It's just like what we had previously over here. Market was failing to break below, and you see the market continued with the uptrend. So same thing has come here. Market is just consolidating. A lot of institutional orders are being taken, and market is just consolidating. Personally, I'm seeing a rally coming. If you go down to the 4-hour chart, we've come back into this consolidation level. So you can see this consolidation is the same thing. And I remember I covered this on Monday, or was it Friday? One of the two. Market has come back into this consolidation. So pay attention to such things. That's what I'm paying attention to. So yesterday, Monday, market hasn't had any strong movement. So you can see this lot of noise over here. Market hasn't really gotten direction. So what you might see is later on today, when the Feds release their interest rates or their press conference, we can see a lot of spikes that will come here. I won't be having any trade. I'll wait for that dust to settle first, because FOMC has a lot of spikes. I remember the last one, same thing happened. I don't remember the date when it was, but it was quite noisy. So same thing I'm waiting here. Market, once we get that, if it gets that break above, then it will be showing me the path of least resistance. That's the side I want to be trading. You can see this trend line has been respected. We had that first bounce, second bounce, third bounce. So I'm really inclined to having the upside, market going to the upside. If we get maybe a break over here, maybe market will just spike this level over here later on in the evening and close above this trend line and continue to the upside. But if market comes back down strongly, closes below this level, then I'll be out of the market, because I won't be having really a clean picture of where the market is going. So that's all I have for you on this one. 4-hour chart, 1-hour chart. 1-hour chart, same thing. We can have a better look at the trend line. So first bounce, second bounce, third bounce. So market is looking for me to get maybe that push to the upside. This consolidation was just a normal consolidation to the side. Get that bounce off here, then we'll be looking for the market to push to the upside. So that's all I have for you on USD CAD. Ken has covered the rest, so there's no need for me to go. Gold, as I said, this triangle is what we're watching. You can see yesterday we had that touch of 78.6, market rallied up, and we can see if as long as we remain below this trend line, yeah, we can see the market going back down. So sideways movement. Personally, I'm looking to trade the other pairs. I don't trade within this ranging pair that often, so I'll wait for a break of either side, then looking to have those trades. But Ken has covered that for you, so I don't need to go through that. So that's all I have, and I can answer a few questions that I'm seeing on the chat room, and then we can end it there for today. Edward is asking, can you show how time liquidity to know which direction the market will grab liquidity? In terms of those liquidity zones, it's very tricky to get them. They're especially seen very clearly on the lower time frame, which I don't go much into the lower time frames, because I think the lowest time frame I go is the 1-hour chart. So I'm looking for those spikes level where market is just spiking but not really getting that direction. So you know that level has a lot of liquidity. So that's how I time. It's hard to get an entry at that point exactly. So getting that entry at that level is quite hard. Unless you're a very high risk taker, you can just enter over there. But apart from that, I don't enter immediately at those levels. The best you can look is maybe if you go to the 30-minute, 15-minute chart to get those entries, but I don't go that low because that level has a lot of noise. Do you guys publish your analysis on TradingView for the public to access? No, we don't do that, because our main analysis we normally post to our subscribers, as well as sometimes on the public group and over here during analysis. So we don't post that much on TradingView. For us, it's not a good, it's not an avenue we are looking really to post our trades. But I can see Ken answered, we do publish our analysis on the, yes, we do publish on our website. So we don't put it much on the TradingView. We normally just we take our screenshots, we do a short article on it, and we post on our website. So if you go to our website, you can get those analysis over there. How do you add one on one to get to? I don't know what that is. Anyway, that's not a question I'm going to answer because it's not a Forex question. Anyway, so that's it. I don't see any more questions. Edward said thanks, you're welcome. And yeah, that's it. So make sure, if you have any questions, you can always WhatsApp us, DM us. You can come visit us here at our offices. Just call us, book a meeting, and we can always have that interaction with you. So apart from that, I'll be posting this video on YouTube. So for the people who have not watched it, I'll just post it on YouTube for today. And then that's basically it. So that's it from us. Hope you have a wonderful week. Yeah, so that's it, guys. Have a wonderful week. I'll see you on Friday.